Hey everybody, it is Friday, the 8th day of January 2010, and the market's closed here. We had a great week. Let's take a look at the numbers here. For the week, we had the S&P 500 up 2.8%. The semis were up 2%, and it was the financials that really led the way. There was a little bit of profit taking we'll take a look at in a moment here today, but 5.7% move to start out the year for the financials. The S&P 500 obviously remains in a strong uptrend. We had broken resistance here late last year at 113 and or 112.80 to 113 area, and then dipped slightly below it on that last day, and now we've had five straight days in a row of green candles here for the S&P 500. And again, the market, you look at the longer term time frame, and people are looking for where is the resistance going to be found. There's going to be a lot of focus up on this area where we had previous support broken near the 123 level. That is also the two-thirds retracement of the 2007 highs to the 2009 lows. We're still significantly far away from that we could continue to rally here for some time before this thing pulls back. So selling short into the strength is just an exercise in frustration and losses. There's no real point in doing it unless you like to, act like you're right and the market's wrong, and we know who usually wins those battles. But we have on the 30-minute time frame, we've got a rising 5-day moving average. Last couple days, we've opened on gaps lower. And or not on Thursday, but this morning we opened on a gap lower. We opened with some initial weakness, I should say, within the first 20 minutes of the day, the last couple of days. But buyers stepped in quickly to take back control, and we've just got a real nice pattern of higher highs and higher lows. We broke a little bit below that level there on Thursday, but again above a rising 5-day moving average. The intermediate term time frame, you want to give the benefit of the doubt to the buyers. Just as on the daily time frame, you give the benefit of the doubt to the buyers with a rising 50-day moving average, and on a weekly time frame, for investors' standpoint, we've got a rising 40-week or 200-day moving average, which says buyers are in control of that longer term trend on this time frame as well. So no matter where you look, we've got uptrends. I mean, we finished we're almost exactly on the highs of the day. It was a pretty range-bound day for the most part until that last half hour, last 20 minutes, when we got some spirited buying here, and further padding the gains for the day, the week, the month, and the year. So the S&P 500, again, it's just in an uptrend. It's 116 is an area I've been talking about as potential for where we might encounter some supply based on what we had seen back in 2008, and that is the let's take a look at that. Let's just go back in time here to take a look at 2008, where we had seen, and let me just do what I did before. This is where we currently are, the 114.5 level, and this 116 had been in an area of some support that turned into resistance, and then so we've got 116, basically 122-ish, and again, I don't want to make anyone think that that's where we're going to encounter supply. Those are just levels that people are looking at on charts, and where they might take the action of slowing their purchases down. There's been a lot of places like that we've looked at on the way up, but haven't decided that that's an area to go short in any of those cases. When we were closing the gap, when we got to the 50% retracement, we were aware of those things, but it wasn't a reason to reverse course and jump on the short side. So again, we're in an uptrend. Enjoy it. Protect your gains. If have a plan in place to correct your gains, because they're not going to continue to go straight up like this. And if you do trade, then there'll be a chance that once you get stopped out, you can repurchase some of the things that you've taken profits on at lower prices. That's obviously the whole idea behind trading. The Nasdaq 100, the Qs, had been a laggard for the beginning part of this week, but and on a percentage basis, they were up 1.7%. They did lag a little bit. Still, obviously, a very bullish-looking daily chart here for the Nasdaq. They had really outperformed the last 2 weeks of the year when they broke past that 44.5 44.80 actually, if I remember correctly, was the resistance there, and we had been noting this ascending triangle, and we've got a real nice move beyond that, and that's kind of been choppy to higher here over the last week and a half. But the fact is, we do have the market closing at highs for the year, and obviously for the move since the March lows. And where's the resistance going to be found in here? Again, we can look at all these different areas that had been prior significant levels, and those are still things to be aware of, areas to be aware of, that maybe the harder fought battle is going to be fought in these levels, but it doesn't mean it will. So just enjoy the trend. Raise your stops. We want to look at what are the more important levels of support. Near term, we still, we had come down and tested the the support from late last year that was briefly broken on the 31st day of December last year, and or I guess the 30th. But anyways, that 46 level will remain crucial, and then basically 45.75. If we break that, then you want to get a little bit more defensive. Next week we have options expiration week. It seems as though the market should remain strong through that, but again, let the market dictate your actions. Don't be trying to impose your belief. Just trade what you see here. And on the 10-minute time frame, we're right up at those highs on the Nasdaq. So really bullish action in really all these markets. The Russell 2000 as well. You can see here, similar to the S&P 500, closed real strong here. Just a real nice surge in buying late in the day, just further adding to the gains. The daily time frame, we had broken that 62.5 level 2 weeks ago, tested it on that pullback, and we've got a rising 10, 20, 50-day moving average. It's buyers in control in all these markets. The thing that you don't want to be doing is just don't be taking big risks by buying the stocks that are already pretty far extended. I've got a good stock that I'm going to put on the subscriber list, and I'll share with other people next week for SFO magazine. Little play that could get going. So. And also, if you don't follow me on Twitter, if you're not familiar with Twitter, go to Twitter and find @AlphaTrends. Anyways, the Russell 2000, we're seeing that this market is starting to approach the levels of the where the market really broke hard, lower hard, that is, right here at the 64-ish area. And these are potential. This is a potential band of resistance. Prior support tends to act as resistance. Tends to doesn't mean will, though. It doesn't mean, okay, you look at this and say, hey, we're at 64.5, that's where we had trouble before, let's start selling short, because there's no reason to sell short a market that is this strong. That's just simply not how you do it, unless you really have a high tolerance for pain, and maybe one day you're going to be right on it, but it's just easier to go with the trend, which is clearly higher. Don't chase the stocks, but with the stocks that you have decent profits built up in, you protect those gains with stops. So in here we've seen a couple of little shakeouts in the Russell, and from these little shakeouts, these little failed breakdowns, came very quick moves. So it seems as though any little pullback is being viewed as a bargain opportunity. Once those gaps lower fail to bounce quickly, then we'll probably be due for a little bit deeper profit taking. So that's what you want to look for. The semiconductors, for their part, we're up 56 cents today, or 2%, and on the week they were up 2.1%, so another solid movement in there. Right on the highs for the day, the week, the month, the year, the move as well. And big volume. This group had been kind of lagging a little bit, but they had held the more important level, which is 27.50, and now we've got to view 27.75 as our first level of support. If that's broken, then a test of 27.50 is likely, and from there I think then maybe we're due for a little bit deeper pullback. But again, nothing to suggest that that is at hand here. There is just a beautiful pattern on these time frames of, except for here, or a beautiful pattern, or recovery pattern, I guess you could say. I was going to say higher highs and higher lows, but obviously we had that break of the of this low here, and now we're just headed back higher again. When we look at the weekly time frame, we can always look at Fibonacci here as well. That is the two-thirds retracement of the 2007 highs to the 2008 lows. In this case, are up here at about 31 bucks a share, and that's an interesting fact. Maybe you could win some money on Jeopardy with that question, but it's not an area that is definitely going to offer resistance. These prior levels, they're just something where we want to look at them, and we want to, when the market gets towards these levels, just like we did with the SPY at the 50% retracement, we were looking at the market there and saying, is this where the sellers are taking control? Well, we look at the shorter term time frame and we say, but we've still got a rising 50-day moving average. We've still got the buyers in control. So most likely it's a consolidation within an uptrend. And then we had seen that pattern of higher lows and the buyers becoming more aggressive. So the path of least resistance had remained higher on the bigger time frames. So, on the shorter term time frames in this case, leading to the break past that 50% retracement level. So you want to be able to, assimilate, I guess, all of these time frames and say, does it make sense to be long, or does it make sense to be short? Then how much risk do you take? And if you're wrong, where do you admit it before those losers turn into something bigger that get out of control and put you out of this business? The financials, again, were the bigger winner this week. They had caught up to some of the other markets, I guess. Still really lagging for since the March lows, but they were up 5.6%. Big move. Last week we had seen that the 50-day moving average, which was declining, was holding this market back. But again, moving averages don't pay, only price pays. When it breaks resistance, you either get aboard as a long, you cover your short, or you sit on the sidelines and cash and say, that's not a market for me because there's mixed signals here. But either way, you shouldn't be losing money when the market moves like this. Worst case, you should be on the sidelines. Now, I've been calling these financials a waste of time for the last several weeks, as they've been very neutral, and they still remain within a range that we've seen basically beginning back in August. So, we've got a 5-month range or so. Now, are we building energy to break out past that? Well, we had just really 2 days back here above the 1540 level, really, and my theory or thoughts are that we'll probably see some kind of pullback under 15, maybe down towards 1475, 1480. That would be ideal, is a pullback that occurred on relatively lighter volume. So we want to see the volume diminish on that, and then look for signs that the market is going to turn higher again, because now we've got that 10-day up through the 20 through the 50. So we want to look at this for pullbacks, because we look at the weekly time frame and we've got more neutrality than anything when we look at this. But because we've got that rising 40-week or 200-day moving average, the benefit of the doubt still goes to the buyers. So again, it's a matter of looking at these time frames and figuring out which time frame makes most sense for your own individual risk tolerance, for your patience level, at your financial conditions, and that sort of thing, how much time you can put into the market, and then making the decisions based on those unique personal parameters. So that's going to wrap it up for today. I hope everybody has a great weekend, and we'll talk to you next week.